All right, all you devils out there, happy Friday. Sam here with you. Let's see, it's 128 on February 4th here. So, of course, we're going to get an update on Bitcoin. Now, not a lot has happened since last Friday here. This little squirt we got off the pivot down here. Perhaps the start of something. It's not a pretty start, but we'll dig in there on the lower time frame here. It's a contender. I think out here, there's a couple things to note here. Now, as I'm looking to keep in mind, this is if you're trying to match this on your exchange, on the chart of your exchange, wherever you're trading, it's not going to be exact, right? This being the Brave New Coin Liquid Index, and we're on a daily, so we look at the price here is 37.3, but if I look above this on the chart that's above it, I'm looking at Coinbase Pro is at 40,500. So this is not going to match exactly to your exchange if you're looking at this and trying to model this out. But if you bring up BLX, you'll have it exactly. So as we move away from this, it's starting to give you a little more confidence here. And now, if you're just looking at that, right, if you were imagining where we might find the C, well, the intersection of that median line, this trend line, this, if you just price action, right? We're saying, oh, well, we're coming back into the prior support. I mean, there's a whole lot here to suggest that that's a very solid contender for the C of this triangle, right? Assuming that that's where we're going to end up here with a triangle. But I think as we move away, I think that starts to make this look all the more likely because, again, here now we're going to look at smaller time frame here. I know you can't see it very well, but if we just broader picture here, looks like that's a 3. I might change my color there. Okay, so I've got a nice little 3 coming into that pivot. I mean, so literally, if you drew this here and you put this set of median lines on here, you might have thought, really? We're going to go from 70K to, what did we hit down here, 32? Really? Right? These median lines, it would serve you well to not trade against them. All right, now, so of course, that's just, I see that from a whole lot of experience of doing this and experimenting with just about every technical method and tool and approach you could take to the market. I wouldn't keep harping on this. It wouldn't be on every chart that I bring up if I didn't think it was ultimately going to help you. So I hope now it becomes part of your repertoire to where no chart goes up without you all looking for where the median lines are in play or could be in play. So with all that said here, I think right now, just the expectation out here, if this is going to hold as our pivot, right, certainly good candidate, what we're looking for is another 3 to get up in here, right, between the 50 and the 618 for that D contender, and then back down for the E, and then free to fly. So the E, if we are gonna finish this, right, it's a lot to make the assumption that we're going to go up, down, right? That's a lot to assume, but we're working off a pattern we know is prone to repeating, and it fits in nicely with the context here. So this is not a hard story to tell. Market doesn't have to cooperate here. Market do what it's going to do. There's no obligation for it to, oh, well, this is perfect, so we must now have a 3 into the D. I wish it was that easy, right? We just working with probabilities here. This is a solid pattern, and again, it fits in the context. So what I'm looking for now is a 3. Now, if we're lucky, or if ideally we'd get a nice simple zigzag into that, right? 535. That would make it super easy. Bitcoin rarely makes it that easy for us, and the start that we're getting here already suggests that this might be a bumpy road. In much the same way that this was very, very much open to interpretation. Now, I see a 3. We're going to look at the smaller time frame here. I think validate that, but others see it differently, right? That's what makes a market. Okay, so again, I don't think there's much else to attend to here. Although I will say, if we get this, right, you will note here, if we come into the D here and then we're down for the E here. Now, the E, these are kind of a wild card. They can underthrow, or you most commonly would underthrow in this circumstance here. We might come back towards this. We don't have to get to the trend line. But if we were to come somewhere in this range here, right, so I'm looking to balance. This is, oh shit, what have I got here? I think 786 and 886. I've got the same thing on this side, just looking for that balance in terms of us falling short of the outside parallel. If we were to do that, God, it would, I continue to think this would be a marquee Elliott wave, right, in the history of Elliott waves. We'll see how that plays. It's still suggesting that our final low here would be spring-ish, mid-April. I mean, you could see how that could play. People get their taxes done, rebates, then off we go. Well, we'll see, right, whether that factors in or not. Okay, so I spent enough time out here. Let's go down to a lower time frame here, where we just kind of simplify. And this is kind of where I left off last week, saying, okay, well, there's a whole lot of Elliott going on here. There's a whole lot of dialogue about what all this could be. There is a simpler approach to take right here. So we looked at just using the Vegas wave kind of as a guide. Here's the last flip, right, when the 233 is above the Vegas wave. Right here, it threatened it, right? You can see how good that is for support and resistance. And I mean, there's a really strong case, right? For those of you that are watching it, members, of course, right? This is it's your prerogative as to how deep a dive you want to take into the Elliott, right? If I didn't think it would help you, I wouldn't keep it as a focal point of our educational material. But just here, right? So if you were long here on the cross, right, that's where you got out. What do we do here? 44 to 58. Would you be disappointed, right? Well, it's just human nature for us to look and go, oh, but shit, man, I could have gotten out at 70. But I'm getting over here, right? If I'm training, that's just part of, right? If you want to keep it simple. Well, if you want to keep it simple, right, it's buys only if we're above the Vegas wave and the 233, and sells only if we're below. Well, okay, that's certainly keeping it simple. And I never am one to say, well, that's a silly way to approach the market. I mean, there are silly ways to approach the market, but that wouldn't be one, right? So you don't have to complicate. Well, complicate's the wrong word. You don't have to drill down looking for this kind of precision. It's really the trader's choice, right? So much of what we're doing here, and of course, members have made the decision that they want to commit to this and develop a skill set in here, right? For those of you on YouTube that are watching here, I try and balance this best I can between, is the Elliott helping here? Is it helping in the decision-making process? Because again, I mean, you could keep it drop dead black and white binary simple. Are we above the Vegas wave? Right, I'm looking for buys. Are we below? I'm looking for sells. Right, that you want to keep it simple. Shit, you don't even use the Vegas wave. Right, you just put the 200 on there. I like that. We'll look at it later. That God MA. Right, it's an average between the EMA and the SMA, which is kind of an interesting choice. But now note what's happened here. So as we look here. Come here, right into the 233, right? It's like here we flip. Now we're coming. Here's the first test of it. Whoa, looks like we're about to get another test. Now, first test here, the market wasn't ripe for it. Just wasn't ready. Now, the other thing you would note here is that this we had talked about this a little bit last week here. This consolidation here, sure, we get the wick here, but really, after that, we're just kind of sideways. Market's deciding, right? This is a threat to push, right? Bulls wanted that to go, right? I wanted that to go. One little wick through the 233, and then down we go, right? No, so I mean that's a drop from 52 to 32. There's a 20K drop right there, just on that. So what? Just to really emphasize this because I talk about this a lot, right? Dumb way. Well, pardon me. Shouldn't say it that way. Lower probability approach to the market, right? Buying these breakouts. Right now, I know right, there are places for it. Right, and you're saying, well, hey, what about selling that one? Yeah, yes, they're all right. We can't go sideways forever. My point is always these are terrible places to enter the market. Right now, if you want to get long, right, this is where you get long. Right, saying, oh, maybe I'll get some legs here. If you wanted to get long, well, okay, are we keeping it simple? Why are you looking for buys if we're below the 233? We say, oh, well, we broke it here. I thought we were going to go. Well, did we flip? Right? Did we flip the 233 in the Vegas wave? No. One 4-hour candle gets a wick through and you're a buyer. All right, well, that's a good way to blow your account up. The same thing happened here. Right? You know this guy's thinking the same thing. Oh, somebody bought it right there. Right? Somebody doesn't know the 233 is right there. Oh, it's going to go. It's going to moon. I can feel it. Right? Somebody bought it right there. Not to digress here, but let's come back to where we are here. So as I see this, this again can be counted a couple of different ways. Just a broader stroke to me looks like just a big 3, right? Which is why I continue to say, okay, well, if that had turned into a 5, well, I'd be back looking at a flat, be back saying, hey, oh no, it's A, B, C, but it's not what we got, right? This looks I think it's a much cleaner, stronger, more consistent with rules and guidelines to work this as a 3, although it can be done as a 5. I think you're going to get in trouble here if you're really, really strict with rules and guidelines trying to fit this into a 5, right? So, well, let's see how we're going to do this. If the alternate count would be, I guess hang on. I guess the alternate count would be that you could count this as a 5. Oh shit, 1, 2, 3, 4. I'm simplifying here. You probably get a 5 into that. It's ugly, and this is it's tough to get a clean impulse in the middle of that. But maybe you're a little sloppy on the edges. You're like, fuck it. Okay, it's a 5, right? So then you're thinking, okay, it's an A, it's a B, and it's a C. Is it? Is that a C? I think it trades much more cleanly as a 3, right? So the 3, see, this is a good example, right? So I'm trying to simplify, but I suppose it's hard for me to do it in a non-Elliott context. See, the reason this is important, because regardless, if you thought this was a 5 and you thought this was a 3, okay, well then if you're applying Elliott Wave guidelines, rules, and principles, we got to have a 5 down here, right? If we're going to go A, B, C, now, do you have a 5 here? Well, you could probably squeeze one in there, but I think you're really doing an Elliott shuffle here to make that fit, right? You're really doing it out of your own bias. Like you want to be right, so you're going to squish it into a 5. Now, shit, I don't even know if you can do it cleanly. Like maybe you're thinking 1, 2. Oh God, that looks like that'd be longer than the 3. Then this is going to be your 4, and that's going to be your 5. Oh shit, here, let's try that again. That thing sticks to your mouse. All right, so let's try, oh fuck, how are you going to do you even have a 5 there? But let's try it. 3, 4, 5. Well, put it off to the side, right? I mean, at the end of the day, perhaps it doesn't matter, really. It's a function of what comes next. Could that fly? Well, it could. I mean, if you are determined to work this as an ABC rather than a WXY, it's fine, right? You're ending up at the same spot here. You're ending up with a candidate for a low. I just think it's a cleaner count to do it this way myself, right? I think this plays better as a 1, 2, 3, 4. It's even that, right? It's kind of a skinny finish. There's not much of a finish there, right? So I don't know that it's terribly impactful on where we're going next, right? So if you're counting it as an ABC, well, more power to you, right? That's all well and good. Love it or hate it. That's one of the variables in Elliott, is that two Elliottians and two skilled Elliottians can interpret the same chart differently, right? Love it or hate it. It's just the reality of it. And there are times when that's not the case, but certainly that would be the case here. So back to trying to simplify. Okay, so whether you're counting it as a 3 or a 5, I don't know that it matters, but I see this. Right? I see a nice 3 to finish it, right? So that would fit with the WXY. Okay, so if that's the case, so we would just, again, traditional Elliott here, we would look for some channeling guidelines here, right? So all I'm doing here is connecting this pivot here. These are the outside pivots, and then the last pivot at the median line and the lower pivot, right? So I've got this nice clean channel here, and boom, did we break it nicely today. Right, nice clean break. So with a channel break, we don't want to just assume that it's off, right? It's very common to come back and give it a test. Very common, right? It's not a requirement. It's not a market must do that. But that would be something to be mindful of. So now as we sit here looking at this, the next variable here, and it seems almost inevitable, is that we're going to hit the median line as we hit the 233, as we hit this high volume node right here. Right, bring that over. Get on the edge of it. Give it a little more kick to it. Well, bring that over. Right, and we're starting to come into all of this structure here, right? So you can understand why there's a high volume node here. So this, are we going to get there? Well, I wouldn't bet against it. So what that seems to suggest, high volume, but here, right here, now this is visible range. That's now the POC. That we're going to hit the 233 in the median line and that high volume node in the POC all about the same time, right? So this looks like it's very probable. Not inevitable, right? This would be very telling if we don't get there, right? That sets up trading principle number 4. It sure looks like it wants to get there, right? Now, you want to see it get to the median line. So this is a slightly unconventional set of pivots that I'm using here, but really it's the only thing that makes sense, right? Because you wouldn't, let's see if I pull this out of here. Damn it, come here. You wouldn't want to do this, right? Or this, right? So if you're going to use this as the first pivot, this is really all you got to work with. Oh, this one is the lower pivot, if I'm not mistaken. I'll get you right back on it. All right, so there's the key pivot right there. Now, we need to get there. We need to get there to confirm this as in terms of this kind of oddball, funky count that we've got here, right? Could this be, is this what we're going to start with? Well, it ain't pretty, but it is there. So now with this established here, pivot, right? Pivot right at the median line with that break here. Now I'm going to just hide it. Right, I'm just going to hide it. So now we look here. Okay, could this be done here? Well, yeah, there's a count that will get it done. So the way I'm interpreting it here, there's the A, there's the B. Well, I get a little funky diag here to start it, right? We looked at this last week. There's my nice little 3 into a 2 impulse. All right, we kind of, A, B, C, right? You have to call that. And then there's a bit of a waterfall. This is a common finish we see in Bitcoin. It's a bit of a waterfall, and then it's quickly rejected, right? Yeah, not to dwell on this, but somebody sold it right there, thinking, oh, there it goes. Oh. I will continue to harp on this until everybody stops doing it. There's not a possible, there is no worse place for you to short the market. That's the worst. People keep doing it, right? Somebody has to keep doing it, right? So sadly, that's the reality of the markets, right? There's always a new novice trader, I'm going to say it nicely. There's always someone new who doesn't know any better, right? Because they will sell that, right? And we need that liquidity, right? How do I know? Right? Look what comes off of that. Right? You don't have to wonder what happened here. I promise you, some novice trader, some inexperienced trader sold that thinking, oh, we're off to there. Now we go. Wow, here we go. Harsh toke, right? Market's going to teach you that eventually. Okay, so let's dig in here and see what we've got. So, okay, on the assumption here, we've got our C, and per Mike Reed, it would be the WXY to get the C. So we have the C, which gives us the Y. Now, is this a great start? Well, it's not a great start, but it's a start. What am I, a 4 hour here? I think you've got to do it this way. I think you've got to go, this is your impulse. So I'm surprised I didn't label this here. So this has to be 1. I think we did this last week. Now, this looks like you got to go A, B, C. Then right in the middle of this, let me put these off. Let's get this right here. Get those in the right color. Okay, so we looked at this list. So you could count this a couple of different ways here. But one thing that's interesting here, right in the middle of this, there's a zigzag. Let me try that again. Here's a 5, here's a 3, here's a 5. Right, so I've got a zigzag right in the middle of it. Right, remember, if we're applying Elliott Wave, we're looking, okay, where are the 3s, where are the 5s, right? So often it's just a matter of, okay, because all I did was just count these out and go, okay, well, how would that fit? Sure looks like I can get another 5 down. All right, so if I'm coming down from here, it looks like I can get another 5 into that corner. So what are my choices here in terms of what that could be? How do I solve the puzzle here? Well, it looks to me like this has got to be done as we'll come over here. This has to be done as a 3. Shit, I suppose you could do it as a WXY. It almost wouldn't matter. Pardon me, it would matter here because we're going to finish this as a 5. So we'd have to do an A, a B up here. So this is the C. So we go, oh, Jesus. Here, let me get that. Sorry, it's in my head. Let's get it on the chart. All right, so we'd have to go, fuck, that's a true double bottom. You might need that. Okay, so let's go ABC into an A. Then we got to go ABC into the B of that A, right? So we're ABC into an A, ABC into a B here at the Vegas wave, and then we're down for a 5, right? So it's a true flat coming out of here. A, B, C into the corner. Now, just looking at it here, again, I know it's always easier in hindsight, right? You kind of look and say, okay, well, we're probing here, but it seems like the support is real. Test, can't push it down. Bears are unable to break this little location. We have high volume here. Plenty of business has been done here. We can almost kind of just do this. All right, well, here's where all the business is taking place. Now we're starting to push away from it. Now we're headed towards the next one, and there'll be a huge series of resistance points we'll need to get through. But we're making some progress on this. So despite the ugly start here, and I say ugly in the context of what you'd hope for, right? What we'd want to see is, that, right? We don't get that. So we're kind of chopping our way, but now starting to see higher high. At least not a lower low here, higher low, right? We double bottom, higher high, higher low, higher high, right? So the foundation is there. So if this is the C coming in here, let's change these to yellow. So, and this is our 2. Well, let's think about that, right? So if this is the 1 and that's the 2, well, that doesn't make a whole lot of sense from an Elliott perspective, and that's not how the algorithm would use it. The algorithm is just going to go from the dominant to the dominant. What's the lowest pivot to the highest pivot? Right? That's what we're going to do right there. Right? The lowest low to the highest high that I have in that range, because the algorithm doesn't care about any of this. Once any of this is happening, it's not going to see this. Right? It's just going to see. Here's what it sees. Right? Or all it cares about. I should say it that way. That's what it sees. None of this is relevant. Right, that's what it sees. Now, so here, slight front run on the 50. That's close enough that you'd anticipate that. We're front run on the target. Well, this would be, again, very telling. It's important that we get there, because from here, we know we have that 80% probability of getting there. Now, you would not want to see it get to the algo target here and then fall over. We want it to get there. We don't want that out. And remember, algo target is not a sell signal. We want it to push through that and get to that median line in that 233, right? I mean, God, can it get any prettier than that technically, right? We get right there. Now, does that mean we're doing that? No, but you want to see it get there because we want to eliminate the possibility of trading principle number 4, failure to get to the median line, sets up a move equal to or greater than the, right? We want to avoid that. So what we're trying to do is get there so we can go, oh, okay, I got a good pivot here. I've eliminated trading principle number 4, so now trading principle number 3 here is if we're going to get to the median line. If we don't pivot here, we might waffle around it here a little bit while the market decides, oh, are we going to go 1, 2? Right, so you can see it. Oh, Jesus. From here, are we going to do a 1, 2 before we go into our 3, right? Because this is the 1, 2. We need the 3. We need our impulse here to confirm that we got a good low, and off we go. Or are we going to come up here, hit it, right? If we don't pivot here, we could just kind of back and forth as the market processes, right? You can see the price action over here before we're going to go up, right? Now, if we're going to go up, now you're starting to think, maybe I got my 3. 1, 2, 3, right? Starts to come together, say, hey, maybe I'm on my way here. Now, per the larger count, what are we trying to get here, right? We're not trying to, well, let me say it this way. So per this count here, we're not looking for a rip-roaring impulse here. Not that that's not possible. It's just that that's not what this pattern implies. What we're looking for is a 5 followed by a 3 followed by a 5, right? So we're looking for a zigzag. Well, it looks like we're making a little start here now on the A wave, on the 5 of the A of the ABC that would get us up there. So if we come back here and say, okay, if this is the low down here at 32, oh, fuck, what's our low here? 32.8. If this is our low down here at 32, and this is 1, 2, 3, 4, 5. Well, okay, I got my A wave. I got my A. Right now I'm looking for at least 50 for the B, and then I'm going up to my C. So the whole thing, you can see it coming together. It's slowly but surely the market reveals itself, right? So if we get this, granted that is unusual, but if we get the 3, 4, 5 here, what have we got? We got our A wave. Right now we're looking for a B wave and then C. Let's take those up. Oh, here we'll do minuet, right? So we're trying to get this A, followed by this B, followed by that C, which would put us, oh, here, let's pull back a little bit. Oh, we should probably just do it this way, right? Kind of all of this, right? As we get this high volume node up here, where we're right here. Now you're thinking, well, how would that fit in with the ABC, right? So if this is our X wave, and if this is our B wave, and this is our C wave, and we did it through a 3, and we're coming into a 3 here, well, the high probability location for the C to the D, oh, here, let me put, oh, well, that'll work. Okay, would be right. Oh, here, let's put it over here, right? So if we're going to stay with that set of median lines here, now that set of median lines may no longer be relevant. We're trying to use that for the A wave here to get to the 50 would be perfect, right? We get to the 50, well, you can kind of see it, right? So we go 1, 2, 3, 4, 5 to the 50. Then we got an A. 1, 2, 3, we got a B. Now we're looking for another 5, right? So anywhere really up in here, anywhere between the golden, I'd do it this way, between the golden zone and the 50 here, so you can see I have an alert right here because I want to know when we get there. I'm putting an alert right here. Oh, is that my A? And then potentially my B and then my C, all right? And then now I've got the triangle all coming together, so that's what we're trying to get to right here, is to get to that little pocket between the 50 and the golden zone, right? That's what we're trying to do, and we're trying to get there through this 5, 3, 5, and then 1, 2, 3, and then pattern completes, and all the conditions are there. Not oh, we're home free, mortgage the house, buy it. Just the conditions for that pattern to complete are there, right? That's all we're trying to get to, right? We've been waiting since July, for 7, 8 months. We've been waiting for this pattern to complete, right? It's very frustrating. It's all the more why I think it's most probably a triangle, right? Triangle just frustrates everybody. People start to lose interest. They get bored. Fuck crypto. It's not happening. What happened? I thought I was going to be rich this year. What happened? What happened? Triangle. So there we go. Okay, so I think we can lay that plan out here. Now we're getting a little ahead of ourselves here, right? So one step at a time. First, let's make the median line. 2, let's find out if we're heading lower now. We're going to start the retrace into the 2 because we need an impulse here. If this is going to hold as a 1, 2, and we're coming out of here with a 5, we need an impulse in that third. Well, fuck. Actually, I suppose we could do it as a diag. We could. But we need a 5, and that's a good target right there, the 51. We get right back all in sync with this, right? All that structure here. Remember, we kind of looked at this last week saying, all right, well, we kind of stalled up here. This was kind of a cluster here. We went here. This is the in the pocket in between. So we need to move from one congestion zone. Here was the next one. Now we started this one down here. We got another one down here. Now we got to get through this. Where's the logical place that might go next? The last time we consolidated. Oh, now we're going to come back. Oh, couldn't get through. Back down to prior consolidation. Shit, I'll probably do it this way. All right, looking at that high volume. Here's the B. Back to the highest consolidation for the C. Down we go, right? You see the whole thing coming together, right? It's just, the market is a slow tease, right? It really is a tease, right? It's like one layer at a time. You're like, oh. That's starting to look good. Keep going. All right, throw dollars. Excuse me. I'm amusing myself. Okay, right. So let's. Oh shit, where else do I want to go here? I think we've got the gist of what we're looking for here. Now, is it time to do anything? Right. So if you're a swing trader here, is it time to be doing anything? Well, you're kind of late to the party, right? If you were looking to be a buyer, that's not a great place to do it, right? Not great, right? So you can see the reaction already at the algo target here. That would not be the ideal place, right? Now, of course, I say that, you got to make your own decisions here. I would never, well, only because I've done it so many times. I would never buy that anymore. I don't anymore would I ever buy that, right? So I am fully anticipating it's going to get to that median line. Now it could go right here, and you say, well, hey Sam, you just missed the move from 41 to 45. You missed that 3-4K move. Yeah, I'm okay with that. Right? It can't be, I got to get every little punch. That's a fool's errand. You're not going to get all those little punches. What you're looking for is that setup where you go, oh, fuck, I know right where I am. I see it, all this played here. I can count this out. I got this. I know where I am. Oh, look at that here. That's a trade that I would take. See, now it's called waiting. Oh, you can think of it this way. It's waiting for your pitch, right? You don't want to swing at every little pump move. I mean, fuck, you can, but I'm telling you, that's a fast way to blow your account up, just through overtrading or fees or whatever it may be, or just it's going to wear you down emotionally, psychologically, because you're going to be wrong so often. You really want to choose wisely, especially with something like Bitcoin, right? You really want to choose it wisely, which is kind of the whole point, right? So we can circle back to where I started and say, fuck all this detail. Once I get the Vegas wave to flip, okay, I'm a buyer. Until then, do we want to be buying? Well, if we did this, we'd be getting a lot closer to that Vegas wave starting to flip. But right now, I mean, if you're a system trader or you have trading rules, right? So a very common one would be below the 200, or in this case, the 233. I'm just using the fib number. If you're below the 200, sells only. If we're above it, buys only. That's a very valid, common, and quite successfully employed approach to technical analysis. Just some filter of some sort, so you're not constantly, oh shit, oh there's a little pump, I got to sell it. Oh, there's a little pump up, I got to buy. There's got to be some methodology to your approach to the market, or you will do that. You'll chase every little pump wick. You'll chase it. Oh, FOMO, right? Oh, shit, it's going. I better get, and then that's when you do stupid shit like sell right into a low, right? It happens every day, in every market, at every time frame. There's always someone who's going to sell the low of the day or buy the high of the day, right? It is just well, it's a mistake, right? The market's going to punish mistakes. So if you keep doing it, right, it's just a question of how much pain you're going to sustain, how much drawdown, how many losers before you just say, I'm never doing it again, right? That's what happened to me. I got to that point where I just say, I don't fucking care how good it looks. I'm not doing it. I'll wait. I'll let that go because I've done it so many times, right? I hit that point where I lost enough money doing it to where it became a hard rule. Before it was like, oh, well, I know I shouldn't, but maybe it'll pump this time. It really looks like it wants it, right? It's going to go. All right, one way or another, you're going to develop hard rules, things you don't ever do, right? I'm just trying to save you having to go through it the way I did, right? And that's not just me learning. That's me watching. Remember, I was a broker for 10 years. I watched hundreds and hundreds and hundreds of traders blow their accounts up doing stupid shit like that. And it's not just buying breakouts, right? I saw all sorts of crazy shit, right? Remember, as a broker back in those days, you weren't really advising. It wasn't like you're managing their money, right? You're just executing their trades. And they might say, well, what do you think here? Well, you had to be careful how you spoke to her. And there's a lot of hedging that had to go on. That these days, shit, I don't even talk to anyone, right? It's all about how cheaply can you get my execution done. But my broader point here, you want to have a set of rules that guide your decision making. Otherwise, you will simply be at the whim of whatever looks like it's moving, which is a recipe for disaster. I know. I wish it was easier. This is the hardest easy money you'll ever make. Right? It is right now. When you're on a roll, there's nothing better. God, I had a couple of my members that are very active option traders trading in. Oh God, I think Amazon was a big win yesterday. And one of the guys wrote me. He wrote me a DM last night. Said I just had the single best trading day of my life. Boy, are those nice things to hear. But he didn't start that way. But he's developed his skill set. So when I see those kind of big wins from members, right, just gives us encouragement here that we're doing something positive here. It's trying to help people. So with all that said here, is it time to do anything? Well, we're not quite there yet. Now, there is one very encouraging point right here. Now that let's just hide this. Right. So remember, there's always an algo on the other side. Now, so we've started to break some of the sell side resistance, right? So we just broke some today, right? So of course, first there was this one, right? Broke it, right? As we hit the 233, I mean, this was very much in play. As we hit the Vegas wave, we hit the golden zone, right? Had to have a big bar there to break that because there's algo resistance there, not only from the Vegas wave, but from the algo that'll be there to sell the golden zone. Now we go back one. We've broken again. Right now, that's the 707 is coming up next. But the whole process, you have to mimic what the algorithm's going to do. Right? So we're going to go back to the next one. We got to get through that one. Now we're right at the 50. But eventually, we'll have to get through that one. Right? So, but look how that's starting to. Right? So if we're gonna come up here and go to that outer pivot, you can kind of see, hey, maybe, right? What a perfect spot for my 3. Right, I start to put that together. Well, let's see if that's the 1. Right now, measuring is going to be different, right? You're going to measure from the 1 to the 2. Let me get it right there. Well, here's your 1. Here's your 1. I know that gets a little hard to see. Here's the 1,618,175 window. Here's the 65 from the highest pivot, right? So you've got a little target box here. I'd probably do it like this, right? Give you a little target box here. We don't have to stop at the 175, right? But if it's going to break the golden zone, that's where it's going to do it. So this is significant here from our X wave, per the way I'm counting it here, to our pivot low here, assuming I've got those. I think I've got them all pretty tight here. This guy's off by a hair. Let's get this guy on. This one is on. There we go. Okay, let's pull back. See what those numbers look like. So it really doesn't change us much here. I just wanted to get that tight. So if we're coming down for the 4, well, we've got plenty of cushion because our 1 is way down here, right? As we had this unorthodox 2 to get us to, so 1, 2, 3, 4. That's what we're looking for the 5, right? And look where that would be, right? At the 2,618, the length of the 1 projected from the 2, right? So wouldn't be unusual if we got the 4 right here. Now you're at the 1,618 right here, right? So this area here, call it 50K. Great target location for that A wave, right? So up here, and we'd be revisiting the median line once again, right? So until this breaks, this should be an excellent guide for the potential for this impulse, this 5 to unfold, right? And again, doesn't have to be an impulse, but that's what we'd hope for, right? We see a nice 535. Okay, how am I doing on time? Okay, there's 38. Do we have time to do this? I had a request from a member to take a look at some of the indicators that we use, and let me just see if I can do that here. Oh, maybe I'll do this in different fashion here. Maybe we'll touch on it today, but I think for members, I'd probably be wise to do something much more detailed on these beyond. So, of course, if you're in the belt system, you'll get exposure to it, but if you're a social member, you may not get as much. So in the belt system, the series of indicators that we encourage, it's not necessarily that it's these specific 3. These are 3 good ones. This is a variation on what I had in the belt system. This is just a different way to look at the OBV. The point here is not these 3. The point is that there are good God, I don't even know how many indicators, gazillions of indicators, but the majority of them there's a tremendous amount of redundancy because there's only so much we can measure. So it's just a whole lot of different ways to represent very, very often the same thing, right? So it just becomes a matter of personal preference, or the indicator that you've spent enough time with that you know it. You know what kind of quirky little things it does, and oh shit, you think of it this way: oh, I've seen that before. I've seen that before many times. So what we suggest is a trio here. 3 is usually plenty. Of course, we always suggest the volume profile and all of the geometry and the fib poles and all of that is up in the chart, right? So this is where we spend the bulk of our time, and which is why I spend so little time talking about indicators, but they certainly have value. Right? I'm not saying to ignore them. So what we try to suggest that you do is, and this is very typical, new traders will often let the indicators guide their decision making. What we're trying to teach you is to do your analysis without indicators. Then go to the indicators and see if it matches, right? Does it make sense with where you are, what you see, what you're forecasting? Does that make sense with where we are here? So again, it's not about these individual 3 here. So this is an RSI, an Elliott Wave oscillator, which is essentially just a variation on a MACD. Hang on one sec. And then some sort of a volume indicator. Now, this is an OBV with a moving average of the OBV. It's more the categories. So our recommendation, again, there's got to be 10,000 variations on each of these. Probably 10,000 within TradingView, if not many thousands. But one way or another, they're eventually all going to tell you the same thing. They're just going to do it a little bit differently. So here, what we encourage, and again, based on a lot of experience of my testing a lot of different things, is that you just want 3 different types. So here I have RSI, which is considered to be the most commonly used, the favorite. I mean, if you could only pick one, right? It's probably most likely 99 out of 100 are going to pick the RSI. If you're going to use an indicator, right? So it's very powerful. It's very well established. It's predictable to a degree, right? So I always caution people to be careful about an assumption here, and this one actually almost makes it harder. When we're crossing from below 30 to above 30, you get one of these lines, or when we go above 70 and we come down, you're getting these crossover lines, and you can see that they can at times be useful, right? So if we, oh shit, here, let's pull these down a little bit and just focus on the RSI. As you're coming into this deeply oversold zone, so this is kind of a good example actually. So as you're coming into this pivot right here, well, here you are right here. Well, now we cross back up, right? So would that have been a winner, right? Not doing it here. I'm on a 4-hour. So this would have been, oh, quickly, what you rolled over and went down again. So when you're looking for something like this, just the fact that it went below 30 and then curled back in would not be enough, right? And here being a good example, right? You would want more than that. You couldn't. You could run a strategy on this and say, well, every time it gets above and it comes back in, I'm going to sell it, and when it gets below and comes back in, I'm going to buy it. You're not going to like those numbers, right? There's just more to it than that. And certainly it can stay deeply oversold or deeply overbought for extended periods of time. And I would tell you, the more you use the RSI, the more you recognize the 50 is equally as important, if not more important, than the 30 and the 70. The 50 is where the rubber meets the road as to whether or not the market's going to start to trend, or we're just going to make a retracement, right? It's very useful, right? So don't have an RSI that doesn't have a 50 on it. The more you work with it, the more you'll recognize that. So I would encourage you to use something that gives you the benefit of this oscillation and that approaches price action through that oscillation variable, right? So you're on a scale from 0 to 100, and you can visualize that oscillation. Now, in tandem with that would be something here. This is considered the Elliott Wave oscillator. I think, oh shit, who pioneered this? There was some early pioneers of this here. It won't matter here, but so essentially, it's almost identical to a MACD, just with different numbers. So we're using a 5 and a 30 5. Oh, what does this one use? Sometimes they're 35, sometimes they're 34. So this is using a 5 and a 34. So you got two fib numbers, 5 and a 34. Oh, and then there's a 144 here on the moving average here. So you've got all fib numbers in that. This one is the bull trading MTF, right? There's a bunch of them, right? And one's not any better than the other one. This is just the one that we recommend for our members as they're working through their Elliott Wave. I think we introduced this in the Blue Belt. So here, the purpose of an indicator like this, giving you the separation between a short and a long moving average, is so that you can get some potential identification of which wave is which. So the simple way to use this is to be looking for the extremes. The farthest that the 5 gets from the 34 would be a potential candidate for your third wave. Well, now here, if we're just looking at it here, if I scrunch this all back in together, you might say, well, wait a second, right? This one looks like it's further, right? But actually what we have is a double bottom here. So you would, and because we don't have a true 5 here, you wouldn't necessarily glean any strength from this. What you will see here, and we'll get to the OBV in a second here, is that there's more selling pressure down here than there was here. But if I were looking at this, this is not particularly helping me identify, oh, that looks like the third. I could have been, right? So this could have been, oh, we're coming down here. Well, there's the 1, the 2. Well, there's the big push, but I didn't get this, right, to compare it to. Now here, I've got massive divergence, but I don't have a new low in price. So it's not as meaningful to me here. But what you're looking for here ultimately is you're looking for signs of divergence. If we're going up, right? So if we're doing this, you're looking for signs of the market losing energy, right? So we're going up, but I mean, this is it's just a visual. Oh, God damn that thing! A visual reference of that. Okay, price is going higher, but whoa, the market's getting weaker. You can see the same thing in the RSI, right? It's just this is visually, I think, a little bit easier way to see it. So particularly if you've got a nice clean 5-wave impulse, it really is. There's the 1, there's the 3, there's the 5 is not as tall as the 3, right? And it kind of sets up the whole thing. So very useful for an Elliottician, but you wouldn't have to necessarily be an Elliottician to be getting benefit from this. I mean, you're getting it here. Both of these are giving you, again, somewhat similar information. They're just representing it graphically slightly differently. So I think this can be quite helpful for Elliott Wave. Most people have an RSI on every chart they're using, just because if for no other reason that so many other traders will have it on, right? So you want to see what they're seeing. Same premise there. Most will, unless they're Elliott Wave traders, will not have this on. Right, I don't know if that's any particular advantage if you're not an Elliott Wave trader, but if you're an Elliott trader, these can be useful to you. It's not always going to be spot perfect. Oh, shit. Let's see if I can find them. Well, let's see. Would this have helped us here? Well, you might have been able to do it. Look at it this way. But here's the... Come here, right? If this here is the 1 and this is the 3, so oh God, this is not a great example here. 1, 2, 3, 4, 5, right? So the other thing where this is commonly used is for the 4 wave. So I want the two moving averages to come together to get towards 0. Now, some people will tell you inside 10, but 0 is ideal as a candidate. So if we were, God, can I label this? If this was a 1, let's see, I guess I can do it. So if you were doing it, oh God, let's see. If this was 1, 2, 3, 4, 5, right? It might be how you'd look at I guess I didn't get my 3 to show up. There it is, right? So you might look at it this way, right? So that would be, there'd be a little divergence here in the 3 because we need an impulse within the 3. So you might say 1, 2, 3. Here's the peak of this move. 4, we come back to 0. Now I come back to 5, right? But I have divergence. Now that's the price action here is not the perfect scenario, but down here I just want you to get a visual representation of how you interpret this. It's a little harder to do with the RSI visually. All right, so these two work well together. Now, the final piece here is the OBV. Now, this is, I just found this one recently. With some of the prior ones, they just had 2 lines here, and you're looking at the separation of them. But this is kind of nice for the same reason that this is kind of nice, in that I get this visual representation of buy-sell pressure. So if you're not, a lot of people just say, oh, okay, unbalanced volume, I get the basic gist of it. If you're not familiar with it, this is a good resource over here. This is stock charts, all right? So they've got their little school here. So just typed in OBV. It's a very simple calculation. I'd be curious how many people have put it on a chart but really understand it, right? It's very, very simple. Simply a running total of positive and negative volume. Right, so if the volume is positive, and so I'll just read it to you. A period's volume is positive when the close is above the prior close, negative when close is below. Right, so it's just a running tally. So here, this would be good examples of it here. So rising volume here, we're going up. We got a down day, down volume, we're going down, we're going back up. Right, so just I'm not trying to do a chart school here, but that's worthwhile if you're not familiar with what that's showing you, or just how to interpret it. So we're just trying to get a sense of, the old premise, volume precedes price. So if I'm looking here and I see divergence here and I see divergence here as well, and I'm seeing it here, and I'm seeing it here, and I've got new price action, well, at the very least, if I'm long, I want to be considering tightening up a stop. It's not necessarily a sell signal, but if I were long, I'd be mindful of the fact that trend may be running out of steam. Can be, but I would always tell you that the safer way to trade it is not to just try and pick the turn. Look for a lower high, lower low, right? So now you got your 3, right? Same thing here. You see it down here. So if I were to stop that right here, and then we look down below, well, now I've got divergence the other way. Come here. Right, now I got this. Right here, I got a new price low, but the sellers are not as aggressive. Right now, cross 0 as I go up. So you're going to have variations between the two, right? So here's essentially a double top, whereas here in the Elliott oscillator here, I got a bigger push. So it won't always be, drop dead, I get it. There's going to be points where like, I thought that was the third. Well, actually, this is a decent example. Whereas here, you're thinking, 1, 2, 3. But wait a minute, the RSI is mighty hot. Now we're turning back in, and you had, this is the kind of the double top that I'm talking about. So you had the push down. It tries to go back up, right? Tries to go back up, can't do it, right? It's too weak. Now here on this one, it doesn't make it to negative 30, right? So it's kind of telling, right? So we go back now, we're hovering around the 50. It's only on this one down here where we get the big spike down here, right? So sellers are aggressive here. But then, and this has a tendency to oscillate back and forth, right? Just as the RSI will do the same. But again, it's a visual representation of buying and selling pressure, right? Who's the aggressor, right? We're borrowing some language a little bit from order flow, but I mean, here, let's reset this here. On this move down here, this last little sell-off, right? Boom, boom, boom. Now, do you want to buy into that? Well, again, that's a dangerous way to approach the market, trying to pick the turns. I've said this pretty much every video I've ever done. You don't need to pick the turns. That's not your objective. Our objective is to be profitable. It's not a requirement to be profitable that you're picking the pivot highs and pivot lows. Right? I'm sure you've heard many times before that the bulk of trading profits come in the middle. You don't have to be the guy that picks the turn. So stop trying. Right? No, trust me when I tell you, I speak from experience here, because that is my natural tendency that I have to fight. And if you looked at any of our futures trading indicators or any of those videos, I call them my dumbass filters, because I'm such a dumbass that I am. I say that in jest, but I can't. When the market's going down, my immediate instinct is I want to buy. When the market's going up, I want to sell. That's just my natural. After many years of doing this, I'm reactionary that way. So I have to design indicators and tools and templates here that literally color code it so that a 5-year-old could follow it, right? Then the challenge becomes, can you out trade a 5-year-old, right? Because often we wouldn't, because we as more mature human beings our ego, our brain, our bias, all of that gets involved. If you just said to a 5-year-old, okay, well, when this is above zero, you buy it. When this is below zero, you buy it. When it's below the Vegas wave, you sell it. When it's above, you buy it. They'll follow those rules because they don't have all the other biases and ego and all the other bullshit that's between our ears that influences our decision making in the market. They'll just follow it. Not easy to outtrade a 5-year-old, right? You think it would be. They'll follow directions. It's often why women, right, are often much better traders than men, right? Their ego is less involved, right? We get our fucking ego involved because we want to be right. And I get that, right? There's nothing sweeter in the market than being right. Nothing. I can tell you that from a lot of experience, as well as the dialogue I had with my member who just shared to me his best day of his life. There's nothing sweeter than that. It's the old, I guess I'm dating myself here, but from The Color of Money, right, with Tom Cruise and Paul Newman, the line that stuck with me to this day, they're walking out of a pool hall with a big win, cash in hand, and Tom Cruise looks to, I think it was Cruise said it to Newman, money won is twice as sweet as money earned. Now, you may not agree with that, right? But that's just a line that always stuck with me because if you're using your brain in the markets, this is, well, you might think of it as money earned, right? There's definitely a lot that goes into being able to be a winner in the market over time. So you could say, well, I earned it, right? The market will force you to pay. But if you outsmart the market and you win, it's a sweet feeling, right? So a lot of what I'm trying to do here with what I'm teaching is not only just my experience, the experience of many that have come before me, those that mentored me, right? 99% of the things that we teach are all things that were taught to me, right? I'm just passing it along. Paying it forward, as they say. Okay, so I think we covered that. So if you're looking here at this move right now with these indicators or your variation of whatever 3 that you're looking for, at least be sure to have something that's volume related. If you don't like the RSI or the Elliott oscillator, use a MACD or a stochastic or use volume. Whatever you like, right? But just you don't want redundancy. You don't have enough screen space. You want 3 things telling you 3 things, and then you're looking for confluence amongst them. Right? So is there a reason to be a buyer here? Oh, shit. Let's go. Well, on a 4-hour here, again, right? We're right at the resistance. The RSI has just turned back over from 70 going under. You got divergence here. You've got a double top here. Is that a place to be aggressively buying? Well, of course, this could keep going, right? And the RSI could stay pinned, right? It often do that. This could just keep going higher. This could just keep going higher. These are always, it's just a snapshot in time. It's a moment in time that you have to make a decision from that snapshot. Now, to make that decision, is it enough? Oh, it's curling down. Oh, it's a little divergence. Is that enough to do it? Most straight indicator sales or indicator traders are not profitable over time. There's more to it. If you just slap some indicators on and just said, auto trade, everybody's trading from yachts in the south of France. It's not that easy. So all of this, right? So because there's so much about this, right? That's why I don't spend any time there. I want you focused up here. And then when you, last thing, it could be the 2, could be the 3. Would that make sense down here? Well, would you want to be a buyer right now? Right? Maybe not. Maybe not. Even though you're saying you're allowing for the fact that this fucker could just rip, right? It could just go. And I'm going to let that go. Because it's not about that trade. It's about being profitable over time. And I know that if I do that, more often than not, I'm going to regret it, right? And I've done it too many times, right? So I just don't do it anymore, right? You'll develop, the more you trade, the more you'll develop hard rules that the market will teach you, right? I'm just trying to save you a little time and a little money. Okay, so do we go up here? Well, maybe. If we do go up here and get this third, right, and then we start to come back down, oh yeah, then let's hope by next Friday, if not sooner, that opportunity has presented itself, right? See how that perfectly that plays? We get through the resistance, right? Think of it this way, right? We get through this consolidation. Oh, wait, we're right. Here's the here's the low volume nugget here, right? So if we can get through that, oh, we're to the point of control. We're right here, and now we're right in line with all. God, TradingView annoys me sometimes. We're right in line with all of that. Okay, I got my third. I'm right at the edge of, I know there's a lot of business was done here. I know I'm likely, not guaranteed, but I'm likely to face a little resistance here. Sellers, right? We're trying to defend there. Wouldn't it kick it back down? We're gone from this high volume to this high volume. Back to this structure. And look at it this way. We're back to all of this support. Prior resistance becomes the support. I got a median line there. What else could be there? Well, if that's the 2 and that's the 3, there's the 50. You see how you put all of that together? Right? I'm doing this on the fly. It's not like I mapped that out and said, okay, if I explain it this way and I get to this and I get here, wouldn't that just be perfect, right? And I'll just set it up like that. This is everything I do is on the fly because I don't need to because I can just do this because I know what that's going to look like. Right, you do this long enough, you'll be able to do the same thing, right? I mean, that's ultimately what we're trying to do here. Okay, I went too long there. That's an hour. Holy smokes, right? But I wanted to get that little bit here about some of the indicators since I had a request for that last week. Okay, I didn't want to do an hour, but there it is. Okay, guys, I hope you got a nugget or two out of this. I'll be back on Monday. We will be. We have a new sponsor. We've never had a sponsor before, but someone will be introducing next week, so stay tuned for that. I think you'll be excited about that. And with that, I wish you guys a good weekend. This will be interesting to see how this unfolds. We'll be back next week to pick it apart and see if there's new information, new decisions to be made. With that, I'll sign off, and I'll catch you guys for the live stream on Monday. Okay, have a good weekend.